In the last video we talked about emotion and the problems this can cause new traders who allow themselves to be sucked in by the psychology of the market. Now essentially there are three key aspects that any successful trader has to get to grips with if they wish to be successful. Those three aspects are mind, meaning our own psychology, money management, meaning the way we handle our cash, and method, which is basically your trading system, however that might be worked out. Now I'm going to look at these three in detail, using it as an illustration, a model I put together called the Trading Pyramid, set out in my first book, The Way to Trade. So in this video, just going to have a quick sort of recap of those three essentials. So mind. Essentially everything starts with you. The trader needs to develop a system that suits his or her personality. I always use the analogy of a football player, say, playing at the top levels, trying to compete at the top levels of tennis, but he obviously can't do it. Similarly, if you're a long-term trader, so if your psychology is geared up towards longer-term trading, meaning a trade may last up to weeks or even months or even years, personally I prefer the longer term myself, then asking you to trade on a very short-term basis, maybe taking 10 trades a day, is not really going to be your kind of thing. So that's one aspect of it. Choosing the right time frame of your trading system is part of your own psychology, and you need to adapt your trading to that psychology. Money management means not risking too much on any one trade. The recommendation is 2% to 4%. So you're trading with a pot of £1,000, then you're risking £20 to £40 on every trade. That may be difficult in fact, so you may have to in fact exceed those limits depending on the amount of capital you're actually trading with. The other thing with money management is you need to control your downside, your losses, and for that we use a stop, although some trading vehicles sort of have a built-in stop, like when you buy an option. I mentioned in March 2009 that I could smell the fear, and I did buy some RBS at that point, I think for 10 and 12. Well, but that actually is almost like an option price. So I mean, I don't need to stop if I'm buying something at such a ridiculous price. And I think the thing went up about 500% after that, or so certainly significant gains from that purchase. Method. There's a whole range of things that you can, as I say, time frames are one aspect of your method. Another is the actual technique. So Krautgap, as an example, is a day trade system. It trades once a day, and it uses gaps. Gaps are a well-known trading phenomenon. If the market gap's open, then very often the gap is closed, and Krautgap trades off that phenomenon. So it gives it an immediate edge in the marketplace. But there are many different types of system. You can just Google trading systems, and hundreds, maybe thousands, will pop out at you, and you can download these and just read and run through them. But the key thing is, do they give you a positive expectation? And for that you've got to test it. So testing your system is one of the key aspects. You can paper trade, meaning that you have to use a demo account with a broker. You need a back test, which takes a bit of time, but it's time very well spent. We're talking about developing a business here, which will stand you in good stead for the rest of your life. So putting in these sort of work, these efforts, is enormously important. Anyway, in the next video we'll look at mind in a lot more detail, again using the model of the Trading Pyramid. So I'll see you again then, and hope you enjoyed this presentation. Bye for now.